The White House issued a warning ahead of tomorrow's consumer price index numbers. Roll that tape.
We expect the headline number, which includes gas and food, to be highly elevated, mainly because gas prices were so elevated in June. Gas and food prices continue to be heavily impacted by the war in Ukraine. And there are a few important points to keep in mind when we get this backwards-looking data. First, June CPI data is already out of date because energy prices have come down substantially this month and are expected to fall further.
You know, I think KJP has a point there because energy and commodity prices are indeed coming down. Larry Kudlow joins me. You think she's got a point? Is that valid?
Well, she says a lot of things, as do the Bidens. So do I think it's a valid point? I'm not at all sure. Here's what I know. Commodity prices have dipped about 10 or 12%. Yep. If you look at the CRB index, which has about 20 commodities in it, or you look at the Goldman Sachs index, which is also about 20. So I went back and did some homework for you, Stu. The CRB futures is down 12%, okay? But year on year, it's up 36%, okay? And if you go back to the bottom in 2020, it's up almost threefold. The Goldman Sachs index, pretty similar numbers, down 11.5% in the last 4 or 5 weeks, up 44% for the past year. So I'm not sure. I will say this. Since these commodities are falling, the dollar is strengthening against these commodities, and the dollar has been strengthening a lot against weak foreign currencies, I should say, easy money foreign currencies. But I think that might hold down inflation some. I'll also note on the dashboard, M2 growth, which some people think is important. I know I do. It's not all important, however. M2 growth is way down from its peak. Its peak was about 27% 2 years ago. It's running, I think, about 6% year on year. It takes a year or two for that to kick in, Stu. In fact, all this stuff, you know, monetary lags are long and variable. That's what Milton Friedman told us. So I'm kind of underwhelmed right now. I think inflation is still on red alert. You may be off the top slightly. Remember, the Fed's target is 2%. So if you could take one more dashboard, the Federal Reserve Consumer, New York Fed, I'm sorry, Stu, the New York Fed survey of consumer finances, the 1 year inflation expectation is 6.8%. That's the 1 year. The 3 year is 3.6%, and the 5 year is 2.8. The reason I do the out years is because every single one of those readings is above the Fed's 2% target. And that is the name of the game. Yep. So I think we have a long, tough haul on inflation.
Okay. I can see that coming a mile off. Larry Kudlow, we will be watching you at 4 o'clock Eastern this afternoon on